How much do you think Tesla stock will be in January? Currently trading below $200, Tesla stock appears to be extremely volatile, which makes it hard for experts to predict Tesla's stock price long term. That said, how much do analysts think Tesla's stock price will be in the coming months? Keep watching so you don't miss this info. Tesla's stock price started in 2022 at $352.26. Today, Tesla traded at $179.82, so the price decreased by 49% from the beginning of the year. The forecasted Tesla price at the end of 2022 is $209, and the year-to-year change is negative 41%. The rise from today to year-end plus 16%. In the first half of 2023, the Tesla price will climb to $246. In the second half, the price would add $54 and close the year at $300, which is up 67% from the current price. Tesla recently announced its plans to cut its output by more than 20% from its Shanghai plant in December as compared to its November 2022 output. This comes as China has been following a strict zero-COVID policy, which has led to protests all over China. The full capacity of the Tesla Shanghai plant is 85,000 per month. Whether this will greatly impact the company's overall Q4 production remains to be seen. What is evident today, though, is the impact of Musk's Twitter acquisition on Tesla stock. Tesla CEO Elon Musk completed the acquisition of Twitter on October 27, 2022 for $44 billion. Wedbush analyst commented that this $44 billion deal will be one of the most overpaid deals in history. Immediately after the completion of the deal, Elon fired the top executives, including the CEO. In his recent Twitter venture, Musk sold $15 billion worth of Tesla stock to finance the deal. As the acquisition has now been completed, Musk will not sell any more Tesla stock, which brought relief to Tesla shareholders. Consequently, analysts are expecting to see an increase in the stock price. However, there remain to be some concerns about how Musk will manage running Tesla, SpaceX, Twitter, and his other businesses all at the same time. Tesla stock, which is already down by 43% from the past 1 year, has lost around 34% since the announcement of the deal. Tesla's market cap has gone down from $1.14 trillion in April to $718 billion. Also, a noteworthy point is that Twitter's interest rate expenses per year are expected to be $1.2 billion on its debt, and with the increasing interest rates, this number will increase. So, Musk's other primary goal would be to increase revenues and profits for Twitter, and analysts also expect that Twitter might not become free cash flow positive until 2025. Twitter is struggling, and it requires Musk's full attention to fix the company. That said, Musk's focus on Tesla may be significantly reduced, which can affect its future, much to investors' dismay. Still, Tesla has a few tricks under its sleeves. The company is starting to prioritize the Tesla Cybertruck and Tesla vehicle under $35,000. Tesla has started to hint at the launch of the new Cybertruck in the next year, which could be a great success looking at the brand loyalty Tesla has right now. Tesla's Model S being the start of the commercial vehicle production line, it has been seen that the company only gained good control over the market only after mass-producing the cheaper versions of Model 3 sedans, which came around 5 years later. The requirement for this is also very high now, looking at slow growth and alarming inflations so that customers could afford Tesla at a cheaper price. Amidst recession fears, Tesla is facing the possibility of slowing down the demand for its EVs. However, Elon Musk said the company expects intense orders in Q4 and to sell all the produced cars. The company attributed transportation issues as the main reason for the shortfall in deliveries, which is increasingly becoming expensive. Tesla management still believes they have a vast supply and aggressively plans to ramp up production in new factories like Shanghai, Berlin, and Austin. Analysts believe that Tesla has not experienced a macroeconomic slowdown of such a large scale since its inception, and present conditions will be the testing time for Tesla Inc., and its approach to better manage the inventory will be key going into 2023. In mid-October, Morgan Stanley analyst Adam Jonas maintained Tesla with an overweight rating on Monday and lowered the price target from $383 to $350, citing continued production headwinds. Some believe that this valuation may improve once Tesla management officially announces plans for Tesla stock buyback. Tesla investors are appealing to Tesla CEO Elon Musk and the board of Tesla to consider buying back shares as the company's stock price slumps to a 2-year low. Tesla stock is still trading below $200, and its market capitalization has plunged by almost $700 billion since its peak a year ago. Musk said during Tesla's Q3 earnings call that the company is likely to do a meaningful buyback next year, possibly between $5 and $10 billion. However, he explained that it would be up to the Tesla board to decide. Buying back shares from the marketplace would reduce the number of outstanding shares available, which increases the ownership stake of current shareholders since a reduced supply of shares often causes a price increase. Tesla bull and influencer Alexandra Mers recently put up a petition on Change.org to advocate for a swift buyback before the end of the year. Mers said this would allow Tesla to benefit from a currently very unvalued stock price and avoid the 1% excise tax that any buybacks exceeding $1 million will be subject to by January 1, 2023. Mers and other investors have also argued a stock buyback would be a show of confidence in Tesla's future results and would return wealth to shareholders. I'm a huge Tesla fan and past stockholder, but in order to preserve my capital, I've been forced to go to the dark side, commented one petitioner, of which there are currently 5,807. I've recently begun to short the stock and have earned back roughly half my losses. I believe in Tesla's long-term growth, but I need to see some action from the board before going long again. A nice buyback would show confidence from the board that Tesla is still a good investment. Tesla stock has notably taken a hit lately for a variety of reasons, including decreasing investor confidence in Musk to run the company effectively. Investors are desperately hoping that as 2022 comes to an end, Tesla stock may be able to bounce back from the dip. Despite the dip, experts believe that Tesla is a good stock to buy. For one thing, Tesla has outstanding R&D and execution capability. The company has delivered numerous innovations and has produced its way around chip shortages quite efficiently. Tesla managed chip shortages by replacing the chips with substitutes and rewriting its firmware. This enabled Tesla to manage production way more efficiently than most manufacturers. For another, many are convinced that with the stock split, Tesla stock is much more liquid now and available at a lower price, if not value. It has strong institutional support as well. Experts believe that the EV sector will continue to grow and Tesla will be a huge beneficiary as it continues to be in the lead. Tesla is significantly well ahead of its competitors in terms of technology and EV manufacturing. In a note out in mid-September, Deutsche Bank analyst Emmanuel Rosner said he believes the rally in Tesla stock is just beginning, with several likely drivers for the company in 2023. We view 2023 as a pivotal year in which Tesla continues to grow volume at a high pace, enters new segments with Cybertruck and Semi, optimizes its manufacturing footprint, and benefits from IRA Inflation Reduction Act, which will lower its cost and boost demand. Rosner wrote, "We see considerable room for upward revision to 2023 street estimates from these factors, with additional upside potential to gross margin from full self-driving, with every 5% improvement in global take rate on new sales boosting gross margin by another 80 basis points, which is not in our base case scenario." Wall Street credits the push higher to optimism around new government legislation that will support the adoption of EVs in 2023 and beyond. Tesla's strong execution in the first 2 quarters of the year has also improved investor sentiment on the stock, which took a slight hit in August amid a broader market pullback. Rosner added the combined potential cost reduction of $3,200 per vehicle could represent a benefit worth 5.5% of the average selling price, but we conservatively only boost 2023 gross margins by 200 basis points to 31.5% from 29.5%, representing a 300 basis point improvement from 2022 levels, and increase adjusted EPS from $6.60 to $7.15, considerably above consensus of $5.82. Lower costs aren't the only Tesla tailwind in 2023, as the company is expected to introduce new products too. Rosner highlighted a potential demand boost from Tesla's Cybertruck and Semi vehicles that are expected to come to market in 2023. Longer term, we see more room to improve on gross margin and even higher potential on operating margins as volume ramps up. Rosner said, "We continue to view Tesla as one of the most attractive stories in the auto sector thanks to its pricing power, superior cost structure, strong execution, and having secured supply and now establishing more meaningful capacity to support considerable growth." Subscribe to this channel for more Tesla stock content.